Hi. Hello, everyone. Hello, and welcome to this session about sustainable finance. So I don't know how many of you have heard of sustainable finance before? Okay, more than I expected. That's good. So with this session, we will try to paint a picture of what's happening within banks, but also on the innovation side in terms of sustainable finance and how fintech could help drive the transition. So today with me, I have Lavinia Kirila. She is leading ESG and sustainability reporting within Banca Transilvania, so welcome. Then I have... Then I have Virak Philip. She is a compliance expert with over 15 years of experience, and she's now working for MPH Bank as a compliance officer within capital markets, and she's trying to integrate ESG and sustainability within those compliance processes. Then we have Natalia Ciobanu. She's working for Indicator ESG, and they are trying to develop an AI-based solution that can help companies report more transparently and effectively. And then last but not least, we have Konstantin Haralempiev, and he's actually developing a solution that is trying to help farmers create better regenerative practices with the help of AI. So as you can see, we have a diverse group of speakers, which I'm really excited about. And with that, I would like to jump straight into the conversation, as we only have half an hour, and we could talk for hours about it, all of us. So, sorry. Lavinia, I want to start with you as someone on the banking side dealing with the reporting. How has ESG and ESG reporting changed the way you as a bank view lending and risk?
Hi, everybody. Nice to be here. Yes, when it comes to lending, ESG is a very powerful concept. Essentially, after the Paris Agreement and after the launching of the EU Green Deal. It changed the focus of the investors on how they see financing, and they are more and more willing to fund sustainable projects that lead that bring long-term value and low risk exposure. On the other side, the appetite of the customers also grew in the last years, and Banca Transilvania as a bank is in between the investors and the customers, and it's answering to the expectations of the regulation on the one side, and on the other side, it serves the real economy through financing companies, entrepreneurs, and individuals. In the past years, more and more companies, including SMEs, have requested funding for financing their own sustainable transitions. And now, renewable energy, green buildings, circular economy, they are not random notions. They are actually, yeah.
It is becoming a reality, right?
It's becoming a reality. Banca Transilvania has made a significant step into the green financing by developing the sustainable finance framework. This framework guided us to issue our sustainable financial instruments through which we finance and refinance activities that support the transition to a low carbon and resilient economy. Also, ESG has shaped the way we hold our conversation with customers. We don't speak no longer only about the interest rates and collateral. We also speak about environmental resilience and how they manage the social and governance risks. In terms of risks, also ESG has definitely shaped the way we assess risk. We started very early, many years ago, when Banca Transilvania started to develop a small cross-departmental team led by an environmental specialist. And the goal was to develop in-house knowledge and to transform that knowledge into tools that we can actually use in our risk analysis. That team is part of our risk department, and they enhance the risk management framework.
I wanna follow up on all of what you've said with you, Virek, because a lot of things that Lavinia mentioned are in part driven by regulation. So in your opinion, as a compliance leader, are all the regulation coming in our way fit for purpose, or is it just a ticking box exercise that doesn't deliver any real transparency or impact?
Thank you, Christina. Sorry about my voice. I lost it. This is quite a critical question. I think this is one of those questions we, as compliance professionals, and you, many of you as innovators, are struggling with right now, because the regulatory requirements are just evolving so rapidly, especially within the EU. If you think about the CSRD requirements, or this European sustainability reporting standards, I believe all of those are, let's say, well-intentioned, definitely, but many of us, even larger institutions, but the small ones, are struggling with, especially for those, is it hard to follow up on the changing regulatory environment, who are working cross-border. The volume of data required, there is the lack of standardized metrics, actually, and missing reliable data as well, makes it much harder. And unfortunately, I believe that is more for many companies and many of us as well. It's just a check-the-box exercise, which shouldn't be the case, unfortunately. So there is no real transparency. But as we are at a Fintech event, so I strongly believe that automation and AI can come in handy here, and I wouldn't say that save the day, but help us out big time. But of course, it has to be a collective exercise, let's put it this way. So we, from compliance side and from banking side especially, what I can comment on, we have to also communicate it clearly what we need. And then we have to work together with the innovators, and this is how we could get a real transparency, and ESG compliance could be more reliable, yes, yeah, and more credible, actually, yeah, because it isn't currently, in my opinion. I see from the audience many of you are agreeing with me, but it's unfortunately this is the case.
Yeah. So we mentioned AI, and we are lucky to have Natalia here. And you, Natalia, you are developing actually a solution that is trying to help companies with a tremendous amount of data that are required for ESG reporting to make sense of them. So what do you see maybe companies struggling with? Not just, we've seen what banks are struggling with, but what do companies struggle with in terms of providing those data to the banks?
This is a wonderful question, because what I've seen in the past years is this dynamic now from what is ESG and why do we need it and so on to another stage where we've arrived. So we are at the stage where the why is much clearer for the companies, right? Whether it's about the company valuation or accessing cheaper credits or being able to access investments or having smaller or higher insurance premiums depending on the plans and so on. So the why is much clearer. What the companies are really drowning in, especially the small and medium businesses, is the how. How to integrate sustainability in the business and what to report and to whom, and how to report that as well, right? So it's like the companies, they're not lost in the forest. In other words, they're more like they're stuck with a compass that is broken, right? And the tools that they have are not helping them make clear decision or action-oriented decisions, right? And actions. So looking a little bit at the top struggles and the top challenges, I think there are three that are interlinked. So one is really the tools, the ESG tools that are lacking in the toolkit. Right? The tools that many companies are already using to be able to provide data, to access data, to process everything, they are not always fitting the way or the data environment or the structure and the workflow of the companies. That are inside the company. So there is a tendency to use this one-size-fits-all approach when using the tools. And then this results in, let's put it bluntly, the ambitions of the business to be sustainable doesn't match the operational reality. We don't know what's happening in the business, and the tools that we're using are not really helping very much because they only show small bits of the picture. And then we are facing this load of demand of reporting this and accessing that and doing that, and we don't know where to look for. So in a way, in other words, it's like we are given the puzzle that we need to put together, but we don't see the picture on the box, right? So we have all these data sheets, ESG frameworks, KPIs, whatever, but we don't see where we need to arrive, so it's not clear for the businesses what good means, what good strategy integration means, what good reporting means. So that's one thing. Connected to this is then the data chaos. And this brings us to the situation where the data might be available, but it's in different places, it doesn't talk to each other, right? It's like you have some things in the email, some things in the ERP, some things in the spreadsheets, but they're not linked. So companies find themselves in a situation like where they need to fly a plane that has, 5 disconnected dashboards and no radar, right? And they cannot make decisions based on that. They really don't have the tools to process this everything and tell them what matters, what to focus on. And this is where AI can help to collect the data, validate the data because we need reliable data, right? Interpret it in a contextualized manner for that business and generate the insights that can help make strategic business decisions. And this then brings us to the third big challenge, which is again interlinked, the excessive focus on compliance. This is really something that the businesses are struggling, but many of them don't know that they're struggling with this, right? So seeing this integration of ESG, of sustainability as a compliance in the sense of, oh, we need to report, we are required to report, is really putting them in a situation where they're missing the bigger picture. So this, I would say it's a little bit like they use tools for reporting, for example, right? But the tools, many of the tools on the market are designed to show what has been done already. It's a little bit like you drive a car and you're looking into the rear view mirror, right? It shows you where you were, where you have been, but it doesn't show you where to go next. And what you're trying to build then with the indicator is something like a windshield, right? What we need more for businesses and what businesses need generally is something to help them know where to go ahead, how to navigate the risks that are coming our way, and how to really accelerate towards opportunities. Because this sort of poor visibility on what's happening in the business, using the wrong tools or using the insufficient tools, really don't allow the businesses to then see what are the opportunities, ESG-linked opportunities that they can give businesses a very strong competitive advantage on the long term, right? Yeah, in general, these are the three big things: the tools, the data availability, and the overly focus on compliance, instead of knowing that with the right tools, with the right mindset, focusing on integrating ESG as part of the strategy can actually boost the competitive advantage and the company valuation over the long term. And reporting is just like a side effect. It's something that once things are in place, it's then easier to report, easier to be more transparent and report with integrity.
And I think you've touched upon several points that we've been discussing as well within the groups I move in, is that we focus so much on the reporting and we forgot about creating a business case in sustainability. And with the business case, I'm turning to you, Konstantin, because you found a way to actually integrate the technology, but also seeing an opportunity in helping farmers transform to more regenerative practices. So what drove you to that, and how is the business going?
Well, the start of the business was purely in a sense of helping the agricultural sector. However, I couldn't agree more with Natalia and Virag here, because the reporting in terms of the agricultural sector, when it comes, it's going to be a structural nightmare without data. One of the sectors where we have a huge availability of data, and it's super underserved when it comes to any type of service, is agriculture. Why? I think the key word that it's not seen is context. And that's because agriculture is very diverse. There's a lot of variability. A little bit about what we do. We have built a proprietary AI. It actually is AI, where it's non-generative AI. It's purely for the purpose of our needs, because it aggregates a huge amount of agronomical data, from soil analysis data, physical, chemical, biological, microbiology as well, climate data, and operational data from the actual farmers. This is the hardest one to get. And I think when Virag mentioned the traceability of the data and the security of the validity of the data, it's very difficult unless you get it literally from that person. And in agriculture, it's very difficult. It's a sector where people don't really trust you that much unless you really give them value. And we saw that from day one. I am not the one with the agricultural background in the business, my business partner is. But from our first meetings with farmers, we saw that these guys, they don't trust us. They don't trust us when we try to sell them something intangible. Like if it's not a machine, seeds, products, something that they could physically touch, they wouldn't trust us. If I tell them, yeah, I've built an AI, this, that, he's not interested. But if I tell him, okay, provide me this information, let's do this and this and this, and 1 + 1 might equal 2.5 or 3 next year, because this and this and this and this. And then they start, obviously in the context of their farm or in their production, they see it, the vision. And we had some clients in the beginning that trusted us. They became our first case studies. And in that process, financing became something that we saw the need of. These farms, they were big farms, They had a lot of exposure to financing. However, it was for a very different purpose. The exposure of financing in agriculture is usually for machines. This financing is backed by subsidies from the European Union, but it's not for the purpose of the regenerative transition. Why? Because the banking sector, it's not, obviously, not every banking manager needs to understand agriculture and what the pH of the soil means and what 300 milliliters of rain in June means. And that's where we come in. Because with all that data that we aggregate, we saw that there is value for very different sectors. Every different stakeholder related to agriculture, and believe it or not, that's a lot of sectors. The food, agri-food value chain in itself has many different stakeholders that will benefit from that information, whether it is to create customized services for everyone up in the value chain, whoever they're related to, and even for the ESG reporting. That is again something that we're trying to focus on in order to help the farmers, because we see that they will need to report, they don't know what to report or how to report, and we already see the bigger companies from the Nestlés, the Unilevers, they are asking for this information down the line, and they say, okay, we'll pay you a little bit more for your product, but I need the data because my shareholders are asking me for the data, and the banks that finance me, they ask me for the data. So I want the better conditions, therefore, I'll pay a little bit more for you to get me that data. And something that we're starting to do with one of our banking partners in Bulgaria, we have developed a product. It's a trial product, sustainable financing product, which is financing only the products and services which this farmer needs based on our analysis for his sustainable transition. Bear in mind, the transition is not a single-step process. It's a process. In agriculture, everything takes, like 1 year is a trial. You do something this year, you see what's gonna happen next year, and then you adjust. And by that time you adjust, everything has changed already. So you need to be really, you need to have models based on very accurate data in order to adjust regularly this information. So we told them, okay, based on this farm's information, we're gonna see what products and services they will need going forward for the next year, and you're gonna finance that, because otherwise you're gonna have only the financial information for this farmer. So the banks normally work with past performance data. Financial data is past performance data. I don't know what's going to happen to the business, not even agriculture, every SME, every business. We don't know what's going to happen next year. We work on past performance. But with our models for agriculture, we can tell them, okay, but if I see how this guy works on his land, I can tell you if he's going to survive the next 5 years and if he's going to be a good client for you or not. Because he might have been a great client for the last 10 years, but if he's keeping in the conventional work, heavy tillage, over-fertilizing, so he's overspending, he's overworking his land, he's not taking into account the changing climate conditions, he might not be a good client for you in the next years. So the context, it's complicated, but I think that it really needs to be taken into account for insurance as well, for banking as well. We are pursuing and we're pushing on a local level currently, because we currently operate only in Bulgaria, but we're looking to hopefully expand in the next couple of years to Hungary, Romania. The local markets are very good for this type of services, but we are pushing currently the limits of understanding in the financial and the banking sector of how they should evaluate the clients in the agricultural sector, and the reporting as well. That will be something crucial for this sector. And if we can be of any assistance, we'll be working with companies like Natalia's as well. It will help us in the meantime. I think the exchange of data, I was about to say, the data in agriculture is available. Over the last 20, 25 years, they have been provided with hardware technology, so we have satellite data. Every tractor has GPS monitor, even more accurate, that on your phone, the phone GPS is 5 meters, on the tractor is 20 centimeters, so it could work remotely. So we have an abundance of data. It's, the precision farming provided us with data, and now we're moving on to decision farming, using all that data in order to make the precise, the correct decisions for the sustainability transition of these sectors. It could be applied to other sectors as well. As long as we have the available data, move from precision collecting to decision making, the actual steps going forward. Speaking on these panels is great. Being on the ground, touching the dirt, the plants, everything, just to see how everything is in practice. This is what it needs to be done, and data is really helpful on that.
It's seeing where the change is, right?
Yes.
On the ground.
Yeah.
We have a couple of minutes till we wrap up the panel, so do we have any questions from the audience? No? Okay, then I will have one. So being at the Fintech conference, if you could maybe think about one thing that would help in your job as a Fintech solution that would make it easier for you to function, maybe to inspire people.
Actually, Natalia mentioned kind of what I was thinking about. Good to be having. It would be a real-time ESG, let's say, intelligence platform, which would, sorry, which would grow and kind of live with the particular organization or institution, and not just purely focusing on reporting or generating the reports. Okay, that would be nice. Would be less manual work on our side, but it's not enough. It wouldn't be enough. I don't know whether we are there yet, but if someone is listening, please. We are there. Okay, then let's have a talk after, please. Yes, so that would be amazing. Not just having a tool, not just doing a regulatory watch, let's say, but knowing our institution and the requirements we are facing, doing gap analysis at all time, and also pre-analyzing the coming requirements we might face too. So, but that sounds great. Okay. So maybe it exists, just I didn't know about.
Because it's very new, right? So it's still in the phase that it's there, but it needs to be used and tested. Because, as I was mentioning before, many companies are just now arriving at the part where they start really questioning how to do it, stopped questioning that much why, because it's quite obvious. But are questioning how, and then they're looking for solutions, and now they're at the stage that not having the knowledge, they go and, oh, this is something that does ESG, I'm going to contract it and implement it. And then they figure out, but it's actually not doing everything I need. And then they contract something else and something else, right? And we are coming and saying, okay, let us help you. And this is this solution that, when I was mentioning the puzzle, right? Because they're now in the phase that they get the pieces of puzzle and they don't know how to put them together, and that means that they waste a lot of time and money on the process. And what we're doing, and the truth is that the process itself, it started with what do we need to provide to the companies so they can report, right? But then at this point it has turned into, the reporting is one module in the solution, because we are able to provide a modular solution to the companies. So the reporting part is one module, but what it starts from is helping businesses map their value chain, understand who the stakeholders are, rank the stakeholders depending on how critical they are, do a double materiality assessment, that's a second module, so actually look at what are the impacts, risks and opportunities within the value chain and within the businesses. Based on that, the other module is, if they've done that and they know their IROs, the impacts, risks, and opportunities, then they know what sort of data they may need to further dive into those impacts, risks, and opportunities. And then it kind of opens up the guidance around what data they need. And that's where they can already make a gap assessment around, okay, I need carbon footprint data. Do I have it? Do I not have it? Right? I don't have it, so I need to start collecting it. Or yes, I have it, so I can input it. And from there, it then goes to the module of reporting, but also to the strategy integration module, because that's where actually, and this is something that in terms of a solution, it's very important for somebody to kind of help a bit more here, which is integrate the financial data with the ESG data. So we're talking about solutions like internal carbon pricing for companies to be able to identify where the major emissions are and how they can drive down those emissions. And internal carbon pricing is very much about connecting financial data with emissions data. These sort of solutions will be very welcome. But nevertheless, this last module is about what the business goals for the long term is, 5 years, 2 years, 1 year, whatever the time horizon is, and then integrating with the understanding of impacts, risks, and opportunities to see whether those can help achieve those goals or can guide the steering of the business goals into a slightly different direction, like maybe open new revenue streams, develop new products, new services, depending where the where the market is going. So this is something that is already happening, and we are doing that. But of course, we need a bit more uptake to validate it further.
Thank you. Anyone want to use the last 20 seconds?
I'll be very interested to see in the near future a fintech solution that will open the possibility to invest or to have a fractional ownership in farming cooperatives internationally, just to open an extra avenue for possible investment and income for the farmers based on performance, based on ESG credibility, based on carbon scoring, for example. I think a lot of people will be interested in the possibility to invest in agriculture if they knew what the industry is about, the nit and grit of it. So if something like that comes up, I'll be very, very interested in it.
100% agree. With that, we wrap up our panel. If you want to chat, I think most of us will be here afterwards, so feel free to reach out. And thank you so much for the attention.